I am extremely confident. I have a very high degree of confidence that the risk reward of buying Bitcoin here it's a tremendous value. And so I know that if I believe that Bitcoin will be $1 million someday soon, whether it's in 2030 or 2035, just on fair value, I know that the market's discounting that to somewhere around a 94% probability that it's going down to zero versus a 5 or 6% probability that it's going to $1 million.
Happy 2024 Bitcoin halving day. The highly anticipated event that will see Bitcoin's block rewards halved from 6.25 Bitcoin to 3.125 Bitcoin is nearly here. The moment we've all been waiting for promises to be as thrilling as anticipated. Earlier, Bitcoin slipped below $60,000 for the first time since late February, causing other cryptocurrencies like Ethereum and Solana to also experience a dip. However, prices are stabilizing in anticipation of the significant event. Despite criticisms and warnings from major investment banking giants like Goldman Sachs and JP Morgan, crypto experts believe this halving will have a substantial impact, potentially even more than previous halving events. Goldman Sachs points out that current macro and geopolitical conditions are more unstable compared to past halvings, cautioning investors not to expect significant price rallies for Bitcoin. Contrary to this view, anonymous Bitcoin analyst PlanB remains optimistic. He suggests that this halving won't be any different from previous ones. PlanB's recent posts indicate his belief that buying 6 months before the halving and selling 18 months after will outperform a buy-and-hold strategy. He predicts that Bitcoin will surpass $100,000 in 2024 and reach above $300,000 by 2025. Similarly, former institutional investor and author James Lavish shares a bullish outlook, foreseeing Bitcoin hitting $100,000 in 2024 and reaching $1 million within the next decade. Unlike Goldman Sachs, Lavish believes that current geopolitical tensions will further drive Bitcoin prices upwards.
How many times have you eaten junk this week? You're just wasting your money. Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. Skip your next junk meal and instead invest in your education. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
Well, what I expect is we have a number of different factors that are going on. Okay, so the first factor we have going on is that we just had these ETFs approved. There have been billions of dollars come into these ETFs, hundreds of millions almost every single day since the since the approval and the trading of these ETFs. They're significant for the people who don't know, who are watching. They're so significant because these are spot-based ETFs, which mean they legally must own the same amount of Bitcoin to the underlying NAV value. So if somebody puts in $1 into that ETF, they have to make sure that there's at least $1 worth of Bitcoin in that ETF to match it, right? So that's why it's so significant. It's not like a future where it's just cash settled. It's just really just a bet on price. These are actually, they have to own the underlying. And so what we're seeing is, and I was one of the people who was a little bit more optimistic and enthusiastic about when these were approved, that we would have a rush of institutions into the space. The reality is, and I understand this, being in the space for a long time, that it takes weeks and months for these banks and for these institutions to create the on-ramps onto the superhighway. So the superhighway is built. It's easy to buy, and now they have to build those on-ramps. The question is, are the banks ready to do this? Are the institutions ready to do this? Do they understand Bitcoin enough? And they're slowly coming to that realization. They're slowly understanding it. They're watching it trade every single day and seeing there are no problems with the custody. They see there's no problem with the settlement. And so it's become easier. It's just taking time. And so we're bumping up against that, or we're kind of passing through that 90, 100-day window that is kind of a quiet period that these banks use in order to make sure that it is working the way that they expect it to work, and that the risks are, it's de-risked on an operational side. So now they're starting to put it in place where you can offer it to your clients if you're an RIA. You can offer it to your investors if you're at Merrill Lynch or JP Morgan or Morgan Stanley. So it's starting, and it's more of a trickle right now that I think becomes a river. But, it's just taking time. So that is a major factor, though, Michelle, is that this is occurring. I am talking to people who are in institutions that are starting to dip their toe in, and it remains to be seen how quickly and who is in. But this is an important development, and it's different from every other halving. This is a significant change, and it will impact the price positively, in my opinion. Is this halving less impactful than prior halvings? I would say probably it is. There's a few things, though. When you think about it, there's only been 3 halvings, right? So this is the 4th one. And so it's a very small data set to look at. Is it significant? What we have seen each halving is, yes, it's been significant price appreciation after the halving. Not right afterwards, but somewhere around the 6 to 18 month period afterwards, you see a large increase in price in Bitcoin. Now, do I expect the same thing to happen this time? I do. I expect it to be similar. And the factor that it is up, the actual percentage, I'm not sure what it could be. You and I have talked about this quite a bit before. I don't love making price predictions, but I do have a prediction that it is going up, and significantly.
James believes that this halving event and the broader crypto bull market will have a more significant impact on crypto asset prices than previous cycles. This is due to the recent approval of spot Bitcoin ETFs, which are currently providing tens of thousands of institutional investors access to the leading cryptocurrency for the first time in 15 years. On the social media platform X, PlanB further discusses the halving and the overall bull market. In response to someone predicting that Bitcoin would surpass gold's market cap this cycle, PlanB agrees, emphasizing that Bitcoin must surpass gold due to its twice the scarcity stock-to-flow ratio. He predicts a Bitcoin top of over $300,000, which is on the lower end of the $250,000 to $1 million range he expects for this cycle. PlanB also notes that while there may not be immediate price movement after the halving, significant price gains will likely take months. He highlights the recent price increase from $34,000 in October 2023, 6 months before the halving, to $62,000, nearly doubling in value. He anticipates another twofold increase in the 6 to 10 months following the halving, followed by a 2x to 4x price surge driven by face-melting FOMO. Returning to James's interview, he discusses his expectations for Bitcoin amidst rising geopolitical tensions.
First of all, Bitcoin has had a tremendous run this year, right? So it's just taking a breather. I actually look at it as very healthy that it's consolidating here. You have a lot of old OGs, original Bitcoiners that have these wallets that are suddenly being activated that haven't been active in 5, 6, 7 years. And so what we're seeing is that there are some who are trading around it, and they're trading around that high, the all-time high price. And when it goes up to 70,000, they're selling it, and it creates some consolidation where people are taking profits. They're waiting for it to actually break through. And you've had some perpetual. If you watch the futures and the perpetual markets, you see that there's leverage at that price point above 70. But so what is going on? Well, it's going to take a tremendous amount of momentum to get through that level. And once it does, that's going to be a massive emotional level, and it's going to become some sort of base for it. So that's one of the things that we see going on, and it's difficult to time that, right? So you've had this run up from the ETFs. The ETFs were announced. It was a sell the news event for a day or two, and then they've had this tremendous rise since then. And now they're kind of backing off. They're backing off because, unfortunately, and like you said, most Bitcoin proponents all Bitcoin proponents who really understand it understand that it's a risk-off asset. It's digital gold. It's gold 2, 3, 4.0. It is a much, much more elegant solution to hard money. Now, the problem is most people don't understand that. And in the world I come from the institutional investing world, it's just seen as digital. It's a digital currency that's speculative. It's young. It's not that much different from ETH. I hear people say this all the time. Well, what happens if Satoshi shows up and sells his million coins? Or what happens if Satoshi just decides to change the code? What happens if the government shuts it down? What happens if, and what they don't realize, and what's so difficult for people to get their head around, is that this is truly decentralized. It doesn't have anybody in charge of it. Satoshi's not in charge of it. The Bitcoin ecosystem stretches across the entire world. And so that is what protects it from bad actors and change in the code. And so, but it's going to take time for people to understand that, especially in the institutional space. And once they do, then it'll move from being a risk-on asset to becoming a risk-off asset. And when that happens, you're going to see Bitcoin not just take a little bit of market share from gold, but and I don't think it's going to demonetize gold completely, at least not for a while. But once it does do that, you'll start seeing people allocate out of their long bond portfolios into Bitcoin. Because why on earth would you be invested in a 30-year treasury that's yielding 5% when you know that the expansion of the money supply is over 7% for the last 50 years? Why would you do that? It makes absolutely no sense. So eventually you'll come to that realization and you'll know that Bitcoin is a much better store of value than a long bond, even the US Treasury.
In recent developments, Ripple's CEO Brad Garlinghouse has revised his previous prediction of a $5 trillion overall crypto market cap by year-end. In a recent interview with Fox Business, Garlinghouse suggested that his initial $5 trillion estimate might have been too conservative. Despite recent price setbacks, he remains confident that the crypto market will continue to gain momentum due to the success of spot Bitcoin ETFs and the upcoming halving event. Garlinghouse emphasized the positive impact of approved ETFs and the imminent halving on the crypto market. He stated, "I think it will continue to see tailwinds." He attributes this bullish sentiment to decreasing supply for various reasons and increasing demand, with ETFs playing a significant role. Additionally, he believes people are recognizing crypto's role as an asset class. How optimistic are you about the Bitcoin halving event and its potential impact on Bitcoin and other crypto assets in the upcoming weeks and months? We'd love to hear your thoughts. Please share your comments and observations in the section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.